Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 370 on April the 11th, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Cleanspark Inc., Riot Platforms, and Gamestop, and we discussed three new trades on Snap Inc., the Direxion Daily Semiconductor Bull 3X Shares ETF, and Unity Software. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the U.S. equity markets finished the week roughly 5% higher after last week's bearish response to tariffs. The Dow Jones Industrial Average gained 1,897 points, closing at 40,212 points. The S&P 500 index grew 289 points, ending the week at 5,363 points. And now it's time for the topic of the week. The topic of the week is high prices. I don't know if you guys have noticed lately, but options have been expensive. No, this is not a mispricing. Volatility, which is a slick mathematical representation of how much a stock price is moving during a specified amount of time, has been super high. Now, volatility is absolutely part of the option pricing equation. So with the market moving around as much as it has been lately, all options are more expensive. Now, if you trade individual options, you probably notice this. For example, as long as the stock market isn't fully crashing, there have been a lot of nice opportunities for covered call trades recently. Now, one thing I like to consider when option prices are high is trading spreads. Even short-dated options can offer some nice opportunities for trading option spreads. Just keep that in mind. Even during periods of high option prices, the spread values still present good opportunities. A spread can never be worth more than the difference between the two strikes. That's true when volatility is high, and it's still true when volatility is low. So if you've been wondering whether or not to trade during this period of high volatility, don't forget option spreads. Do the math on the spread and see if you can find a trade worth putting on. All right, so let's get into the trade review of last week's trades. We're going to start off with the covered call on Cleanspark Inc., symbol C as in Charlie, L as in Lima, S as in Sierra, K as in Kilo. At the time, the stock was trading for $7.32 per share. I looked at buying that stock and selling the April 7.5 call at 52 cents, hoping for a return of 9.56% in 2 weeks. Well, shares of Cleanspark grew 18 cents, ending the week at $7.50 per share. The call option we sold lost 13 cents, leaving us with 31 cents of net profit if we were to close the trade out immediately. The stock is 70 cents above our break-even point, and with 1 week left before expiration, there's no reason to make any adjustments on this trade so far. The trade is looking good. In this volatile market, you'll definitely want to keep track of the stock throughout the week and definitely have a plan for making any adjustments if needed before Thursday. Next up, we have the credit spread on Riot Platforms, symbol R as in Romeo, I as in India, O as in Oscar, T as in Tango. At the time, the stock was trading for $7.14 per share. I looked at selling the April 7 6.5 put spread at 15 cents. That could give us a maximum possible loss of 35 cents per spread. Now, shares of Riot Platforms lost 8 cents, ending the week at $7.06 per share. The out-of-the-money put spread that we sold is still out of the money, albeit a few cents closer to being in the money. Now, we are 1 week and 6 cents away from this trade causing us some problems. You won't collect enough premium at this point to make it worth selling a call spread and creating an iron condor. So your best options are to either close this trade out by buying the spread back or holding on to it for the next week without making an adjustment. The economics haven't changed enough to make an adjustment on this trade. So the stock price is 21 cents above our break-even point. The math still works, so no adjustments are needed. But certainly with the craziness that can happen in expiration week, you want to have a game plan for what you're going to do if this trade moves against you. Finally, we have the debit spread on Gamestop, symbol G as in golf, M as in Mike, E as in echo. At the time, the stock was trading for $23.46 per share. I looked at buying the April 22.5, 23 call spread for 36 cents. That could give us a maximum gain of 14 cents, or that would be a 38.39% return in just 2 weeks. Well, shares of GameStop grew $2.92 per share, ending the week at $26.38. The in-the-money call spread that we bought is even more in the money, deeper in the money at this point. The stock price is $3.52 above our break-even point, which is great. This means that the trade is profitable and looking good going into this final week of expiration. So with 5 days left, no adjustments are needed on this trade at all right now. The trade still has 5 days of risk, so keep track of that stock price. Every day before expiration is another day that this trade could move against you. So you want to have a game plan and be ready for anything that might happen. But I like the odds at this point. It's looking good. So that's it for the review of last week's trades. This upcoming week will be a short trading week. It's only 4 days long because the U.S. markets will be closed on Friday in observance of Good Friday. Now, expiration for April options will be on Thursday, April 17th. All new trades on today's show will use the May 16th expiration for monthly options in the month of May. And we're going to start off with the cover call like we always do. We're looking at Snap Inc., symbol S as in Sierra, N as in November, A as in Alpha, P as in Papa. The stock ended the week at $7.97 per share. I'm looking at buying stock and selling the May 8 call at $1.02. Hoping for a return of 13.17% in 5 weeks. Now you enter this trade by buying stock for $7.97 and selling the May 8 call at $1.02. This trade makes the most money if stock prices finish above $8 per share. The break-even price on this trade is $6.95 per share. In real terms, the stock purchase would require $797, and you'll collect $102 for selling the option. Next up is a credit spread on the Direxion Daily Semiconductor Bull 3X Shares ETF, symbol S as in Sierra, O as in Oscar, X as in X-ray, L as in Lima. The stock ended the week at $10.25 per share. I'm looking at selling the May 10-9 put spread at 39 cents. That could give us a maximum possible loss of 61 cents per spread. Now you enter this trade by selling the May 10 put at $1.69 and concurrently buying the May 9 put for $1.30. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $10 per share. The break-even price on the trade is $9.61 per share. In real terms, you'll collect $39 per spread that you sell and have $61 at risk. And then our final trade on the week is going to be a debit spread on Unity Software, symbol U as in uniform. The stock ended the week at $19.22 per share. I'm looking at buying the May 18-19 call spread for 64 cents. That could give us a maximum gain of 36 cents, or that would be a 56.25% return in 5 weeks. Now you enter this trade by buying the May 18 call for $2.92 and concurrently selling the May 19 call at $2.28. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $19 per share. The break-even price on this trade is $18.64, and in real terms, you'll pay $64 to enter the spread, and your maximum gain is $36 per spread. So that's it for this week's show. Thank you so much for listening. I hope you have a wonderful weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.